Welcome to my market update video. I'm going to take a look at Bitcoin. Since the last Elliott wave count was invalidated, so we are going to take a look at a new Elliott wave count. Okay, let's start with screen share. Now you should see my disclaimer. And that's the English version. Here you have my disclaimer in French and one last time in German. The link is in the description to my internet site web page and the disclaimer. Now let's jump into Bitcoin. Okay. Here, as you see, the next FEEP level would be at 6K, around 6K would be the next FEEP level, since the other one are gone. So next FEEP level would be at 6K. And the correction should be over. It should be over, but as we will see, I don't think it is. What is important here is that we have made the first wave up, and that we are now having a complex correction, not a simple correction, but a complex correction. This complex correction is taking a long time, so it's deep and complex. It is long and deep. It is price and time, this correction. Since this correction is complex, I expect the next one to be simple. So wave 4 should be simple, but this one is complex. Last bull market, we were more lucky since the correction were short-lived. This one was complex, this one was simple. And here we have now again a complex correction, and I expect the next one to be simple. But it looks more like the first correction we had, this one. And not even this one, it looks like this one, like wave 4 of the first bull market. So here you have the next halving, which is coming up very soon. And now let's zoom in. On the weekly, I'm still waiting for more data, but this was labeled C. But even with a C label here, I don't think that the correction is not over. It's not that I don't think, I know that the correction is not over. On the 2-day, well, I thought that was the bottom, but since we went lower, it must be relabeled. And to talk about that, we will take a look at the 1-day. So on the 1-day, we start with a zigzag, then we have an X wave, then I called it an irregular, but here B, if I say A, B, and C, B did not go higher than X. So this is not 100% irregular as in the textbook, but I still call it an irregular. And since we have an irregular, and now we are still in a correction, which means that this one is not a wave 1, but a wave A. And if that is wave A, then this is wave B. And after wave B, we have a wave C. So there's that linker, that X wave, okay? And after the X wave, when you get a zigzag, an irregular, and then a flat, and then normally you should get a flat. So if we get an X wave here, we should get a flat, an A, B, C, and then go up. So what do I not like about that correction, as it is labeled right now, is that it's too long. It's taking too much time. I don't think that we will go much lower regarding time, price, but it is taking too long. In my opinion, the correction is too long, especially if we still have to make the X wave and then the flat, the ABC. So to me, that is too long. But the thing is, if the correction is not simple, it was simple up to here, okay, but too short-lived in time. If the correction is not simple, but it is complex, and this is a complex correction, when you get an X wave and then an irregular, then one more X wave, and then a flat. That's a complex correction. It is a complex correction if it is more than a simple zigzag or a simple irregular or a simple flat. If it's more than that, then it's complex, and this is a complex correction. So the problem is, as soon as you get a complex correction, it is very hard to say when the correction stops. When you hit the C wave, I thought that we did hit the C wave here and that we started an impulse wave, but since we went lower than the C, it is not the end of the correction. So if that's not the end of the correction, we have to look for the next most probably end of the correction, and the next probably end of the correction, I would put it here. And that's a triple correction. It means you have 1, 2, 3 moves in that correction with two linker, with two X wave. And if you want, you can call it a W, X, Y, X, and Z. So we still have to make the X and the Z. And that to me is taking too much time. It is taking too much time because if I go back to the first, here you can see some, if I zoom out, you see some cycles. And the cycle is telling me that it should be right translated. So here the cycle was left translated. It was in the left part of the cycle. Here the cycle was also left translated in left part. Most time is spent going up, and then less time is spent going down. Here again, most time is spent going up, and less time is spent going down. But if we hit a 5 here, what I expect, it should be right translated. So we spent less time going up and more time going down. So if that cycle is correct, and it probably is not because we are taking too much time, but if that cycle would be correct, we should be very soon touching the 5, and that does not work out as it should, because if I go back to the daily, as you can see, if we take so much time for this correction, then we don't have enough time to rise. So here we are making the 1, 2, 3, 4, 5, but that is only wave 3, and after wave 3 we will get a wave 4 and wave 5, and then it's already the 1st of December. And if we go back here, here the 1st of December is here. So, I mean, the problem is that I have wave 3 here. I have wave 3 at the 1st of December. And that means that we're taking much longer. That means that this cycle will be right translated again. Is that possible? Yes, it is. I mean, there's nothing I can do. It does not end up with my cycle time analysis, but I still leave the cycle. I still will leave the cycle on him because they're not 100% invalidated. It's just that I don't see us going up fast enough. Once, if we take so much time for this correction is simply too long, in my opinion. If we still have to do the X wave and then the ABC of the flat. So if this is the case, it is taking too long. It could also be that something is wrong with my labeling here, that I messed something up and that actually the count is different, that I put an X wave where I should not have put it, and that the stuff is maybe simpler than it looks right now. I don't know. Or maybe more complex, I don't know. But that there's something wrong here, and that actually the bottom was here, that was a C, not a B wave, but a C wave, and that we can rise from here into an impulse wave. But as I see it right now, and as I see it right now, this is wave B, then we have the wave C, which is the X wave, and then we get the flat, the ABC. That's as I see it right now. I don't think that we can end with an ABC here and then have an impulse wave starting from here. I don't think that is possible. And since we went lower than here, it is a corrective move and not an impulse move. So the thing is, as I told you, it is a complex correction. And if it is not a simple correction, it is nearly impossible to say where the correction will stop. So I guess I can tell you once it's done. Right now, I don't know. The good news is that even if it is a complex correction, and even if we spend all the next couple of days here until next year, March of next year, even if we spend all that time here, I still think that we should not go much lower, because to me there should be a flat following an irregular after a zigzag. So I don't think we go much lower. We went already deep, more than 50%. So I do not expect us, let's see how much we went down, but I think we went more than 50%. Let's take a look. So the correction was actually 50%, a little more. Yeah, 50.8. So that's enough for the correction. Since we went down that much, I don't expect us to go down much lower from here. And also that's the first reason. And the second reason is that we have a zigzag and irregular, and after a zigzag and irregular, I would bet on a flat. But as I told you, it is nearly impossible to say where the correction will end once it is more than a simple correction. And since it is more than a zigzag, clearly more than a zigzag, it is nearly impossible for me to tell you where it will end. What I know is that what I know is that we had a wave, as you can see here, that we had the wave 1 and that now we in a wave 2. It might have ended, probably not. So if it has not ended, we will spend some more time here. But this is a extremely deep and extremely, well, not extremely deep, because we could go down to here, but still, it is a deep correction and a very long correction. It is longer than, for now, it is longer than deep. It looks like if it will be longer than deep. So what I know that is we have wave 1, that we are in the process of terminating wave 2. And my feeling, but that's only my feeling, is that we should get a flat. So I don't expect my price to go much lower, but I expect us to spend still some time here. Unless something is wrong with my account and we hit, for instead of hitting a B, we hit a C, but I don't see how. So for now, I would, that's my outlook. So we're still gonna take a look at the rest of the indicators, but that's all I can say, is that to me, we are still corrective. We are in the process of making a linker, which is an X wave, and then we should probably make a flat. But that's more guessing than just telling you something very accurate, because if it's more than a simple correction, as I told you now 10 times, it is nearly impossible to say where the correction will end, where the C will end. You cannot say it before the correction is over. And since we are still in it, this is my best educated guess, but it is just an educated guess. So anyways, I think that the level right now is perfect to go long. So if you're hesitating to go long, I would go long if I was not already long. But that's it's an extreme good level to go long. So I would go long if I was not already. Now let's take a look at the other indicators, which will be mostly bearish. So the first one is bearish. You are on a 1. If you get a 2 below the 1, that would be catastrophic, according to TD sequential. Here with the moving averages, those are EMAs, exponential moving averages. We are still positive, but on the simple moving averages, we had a depth course here. And if price does not pick up, we will get a second depth course, which is bad. Also, well, we are sitting on the red moving average, and during the last bull market, that never happened. So this is not looking good. And the bull market before that, we also did never sit on the red moving average. So this is not looking great. If I look only at the moving averages, I mean, it's telling you that we are very low, and that is normally not the case during a bull market, historically speaking. Okay, dollar cost average told you to buy here. If you did, great. If not, right now you could still be dollar cost average, but the best time to buy was here. I mean, that does not make sense, because it's just the total cost average indicator tells me when to go long, and it told me here to go long. And if I go before that, I think it told last time too, but I'm not sure of it, but I think it did. Yes, it did. So it did even during the last time. That indicator is great to tell you when to go long, actually. So and looking from that, you are quite close to the level where you should have gone long. So if you did not go long here, here is now the perfect time to go long. Here we were positive, now we're negative. Here we are negative. We had the def cross and the TK is negative. Here we are negative. So I'm trying to make not too long, but this one is negative too. I'll just take a look at them and tell you if I see something positive or negative. This one is negative too. Most of them will be negative. Here we could have had a gray golden cross, but it did not happen. And now we're negative again. I mean, we're still negative. Momentum is looking horrendous right now. But when it's that much negative, it could be picking up. But for now, it is not in the chart. Here we are negative. So let's hope that stops very soon. Here we are negative. Okay, here I have to look up what indicator that was, but I get to that later because if not, the intervention will be too long if I have to find which indicator is missing. Here's one of my indicators is missing. I hope that won't be the case with all of the next indicators. Okay, this one is here. We are below the moving average, the white one, and that is, to me, is a bear market. I mean, it's negative, not a bear market, it's negative. MACD is totally negative, but it's a lagging indicator. Stochastic is totally negative, and we are low on the stochastic level. We are oversold. So I don't like us being that low on stochastic, and I think price should be picking up. Here we were negative, and now we have a green one, which is positive, but for now the line is still going down, which is negative. We had a golden cross here and still not negative. I mean, yeah, here we had a golden cross, but if we skip at that level, we will get a dove cross. It's not that positive because the green one is not on top. Here we're negative since the last candle was a bearish harami. Here we're negative because we are below the middle band. Okay, this is negative. The last one, this one is negative. This one is very close to be negative, and this one is negative. Here, the red bands are starting to show up. So that would be negative if it keeps at that level. Okay, stop and reverse, which normally are positive in a bull market, now give me a negative sign. And that happened only once during the last bull market. And during the bull market before that, it happened during a longer term period of time. So I think this bull market looks a little like this correction. I mean, a long correction where the stop and reverse get hit. It does not look like the last bull market. Here we're negative, and we took that point out, which is that fractal point out, which is also negative. Okay, I think that's percentage error. Yeah, we are very low on percentage error. On OBV, we are very low. And here we're negative, whatever indicator that is. Let's change this one. And here we are below that moving average. I'll actually like it more if it's right. Since we are below that moving average, it is negative. These indicators, okay, the first one is still positive, but we are low, but it's still positive for now. Here we went negative, and here we're still positive. Here we have a downtrend, so that's negative, and this one is also negative. The two indicators are negative. Here the first one is still positive, but I don't know if that will be for the case for a long time. Well, it is positive, but starting to look negative because the white one went higher than the blue one. Anyways, as long as blue, I say it's still positive. This one is also positive, but pointing down. This one is negative, this one is negative, and the last one went negative too. Here we were positive when we had the green dots below. Now we have all the dots, the red dots higher, which is negative. That is not volume, but it's something similar to volume, and it picked up. This one is negative, and the first one, which is probably RSI, yes, it is pointing down and close to oversold. It is at least it is very low in a bull market. So that should reverse. Here on the first indicator, we're negative, second negative, third negative, and last one negative. First indicator is negative, second one is negative, third is negative, fourth is negative, and fifth is negative. So we are still positive, but less positive as in the past. When the green one is above the yellow one above the red ones, it is fully positive. Now the yellow one is above the green one, which is negative. And we went below the last, below the red, dark red one, which is negative too. But we are already between those two, and I hope we soon get above the next red moving average. It is not great looking because that never happened during the last bull market, and even before that it never happened. So as you can see, during this bull market we never went below the red moving average, the dark red moving average. We never went below it. We never even touched it during the last bull market. So, and I expected this bull market to be similar. It is not. Here also, we never touched the red moving average. And I expected, if it's not similar to that one, to be similar to this one too. It is not. It's not. It is different. I mean, it is worse. It is looking worse. This bull market is looking worse for now. So let's hope that changes very soon. But for now, that is not looking good at all. I mean, it's not the end of the world because we're not below the last red moving average, but we are above it again, but it's still not looking good. First one is negative, second one is negative, third one is negative, and fourth one is red. So you can call it a negative, but that's not the end of the world. That happened before, and normally price should just pick up, and I hope that will be the case. I think that will be the case, to give you something more certain. Here, we are negative, and here we're negative. Okay, we are low on the first moving average oversold. We are low on the second moving average oversold. We are negative on this one, negative on this one, and low on this one, oversold. But not looking too good. First one, we are negative. Second one, we are negative. Here, we are extremely low. Here, the cycle is negative again, and here we are negative. So here is still positive for now, but it won't last if price does not pick up, and here we're negative. Here we're still positive for now. Here we are still positive, I would say, but it will be soon negative. Here we're negative, and here I have no indications, so I can tell you. For now, it's not negative, but it's not looking good either. Here you had a red arrow, which is negative, and now, but you're above the cloud, which is positive. If you fell below the ground, that would be catastrophic. Here you have a red indication and that's not great. It never happened before during both bull markets. I don't think it ever happened. Let's see, it never happened during this bull market. And let's see before that if it happened during the bull market, the first bull market. Let's see if it happened during the first bull market. It did happen once here. Okay, so there was one exception in here, but the bull market did, well, it started, but it was not very high. So it's a bit different scenario. Anyways, this is, to me, this is quite alarming because that should not be the case in a bull market. So I hope that price will pick up and we will get a green indication above, because that's not good in a bull market. Here we're negative. Here we're negative. This one is not the end of the world, and this moving average or whatever it is, this band is holding for now, so that's not bad. So to me, that was time to buy, and here we should be in a bull market. I don't expect us to go to the first band again, because you don't revisit it too often. I mean, we only visit that when we were at the lows of the bull market. So of the bear market. So we only touched that one when we are under lows at the bear market. So I expect this band, as I told you, I expect this band to hold and price to pick up. I also would like to see us here in the green, moving up at bands and then moving up. So, I mean, the bull market should start sometime soon. For now, we are too low. If that is really a bull market, it is starting to worry, because that's the last band. Huh? I mean, this band actually already could have hold. It did not. So this is the last band, and if that does not hold, then the next band is down here. So let's hope it holds. First one is negative. The second one is NVT, and NVD does not work anymore. So I should take it off. Okay. Now finally, people are bearish. So since people are betting that price will fall, it should rise. That's positive. Here, no more indication apart from that was what was the top, but now no more indication. Here we took that point out, which is not good. And that's all I can say for now. Here we are negative. Here we are negative and starting to point down. So I don't like to see that, because the first sign that we are in bear market is when it turns negative, and the second sign is when it goes down. So as you can see here, when it went negative and then turned down, it was the confirmation of a bear market. Before that, we went negative, but here we went down too. So it's not the end of the world. But still, we should be green in no time, because for now it's not looking good. Here we are negative because we are below the middle band. Here we close the gap. That's very negative, and it's quite alarming, because we touched the lowest band. So we went as low as we can go. And this one is negative too. Here was a long signal, and for now there's no other signal on that indicator. I think it is working more or less. I mean, it told you to go long here, and then here it told you to short, here it told you to go long, here it told you again to go long, here it told you to short, and here it tells you to go long. So that's not too bad. Here we are starting to go negative. Huh? We were positive until now, but now we're starting to go negative. Okay, first one is negative, second one is negative, third one is negative, and the last one, I would give it a negative too. So let's count how we had 1, 2, 3, 4 sell signals, which is negative. Here we are very low, and here we're very low. Here we are negative for now. We should be up here, okay? So we should be around 10K, and we are at 7K. 7.2. So that's not great looking at all. We are in the middle of that, and to me that's not perfect. I would give it a negative for now, because we are very low in that band. But then again, since I expect the bull market to resume, it could be a positive, could be a good time to go long. We are below that trend line, and then we have that one and that one, which are resistance. So now we have to get higher than the lowest trend line, the green one. Here, the blue trend line, we are above the blue trend line, which is good, but we still have to get above the purple trend line. But I think we will manage as soon as price picks up, as soon as the correction is over, the corrective phase. Here we're very low, which is negative. That still looks not bad. It would be looking bad if the last blue line breaks, but as long as we are above it, it still looks not bad. Here we're still positive. I don't know for how long we will stay like this, but for now we are still. Here we went quite low. We are not at the top and rising, so I would give this a negative. So it would be nice if we went higher than the first moving average. The second one is bear market territory. So let's hope that we go higher than the first moving average. Okay, we still we are sitting on the blue moving average. We have the red one and the white one below it, but that is not that great. Here we broke all the FIB levels. If I compare that decline with the current decline, we traced. Actually, I should not do this. This is not that useful. I should compare. I should compare. I should compare. No. I should. Well, actually, I'm not sure that that is correct, because I don't think that the wave started here. I think it started somewhere around here. Yeah. I'm not sure, but I think it started somewhere around here. So if it started somewhere around here, we broke the 618, and support would be at 786. So we have one more support, and then it would be a full retracement. That gives quite, that looks not too bad. So let's keep it. I mean, Yeah, it's more or less that, but not too helpful. Maybe I take both of them out. Actually, I think I will, because I talked about the FEEB level while we were looking at I talked about the FEEB levels while we were looking at A8 wave. I talked that's when I talked about the FEEB levels. So since I did this, there's no need to talk about it right now. So I know that wave one started around here, so you have a FEEB level here, but I talked about that while we were looking at Elliott wave. So I can take it off. As soon as my browser lets me take it off, but I want to take it off. So please. There we go. Okay. Now let's keep on looking at the next indicators. Here we are negative, here we are extreme low, here we are picking up. I think that's positive. And here we have a lot of volume. It's not volume, but it's something similar to volume. It's picking up. Here we're negative. Here we are positive again, which is great. And here we're negative. Here we're negative because we are below the middle band. Here we are negative, same goes. Here we are negative because we are below that band, and normally we should be above it. But what is positive is that it's still pointing up and not pointing down. Same thing goes for here. Okay, this is not looking great. The red momentum is picking up, so that's quite negative looking. This, I would give it a positive, and that was a buy signal. But I mean, what's there to say? It gave you a buy signal here, gave you a buy signal here. Normally, we're expecting an uptrend after all those buy signals. Okay, we are positive on this one because we are above that moving average and it's green. Gave you a buy signal here, and now we are extremely low, but it's not giving you a buy signal for now. Here we are extremely low, and here we are negative. Here we are negative. Same thing goes for this one. It's negative. Negative. First one. Well, it's red, so the red candles are negative, but this the moving average is pointing down, so I would give it negative too. Here you have green. For me, that's a sign that price should pick up. And the last one is looking horrendous, extremely negative. First one is negative because you are below that moving average. This is negative, and the last one is negative. And we were in a negative period of time for a long time now. Tether, whereas the tether is still very high and even slightly picking up, at least not pointing down, so that's positive. Look, it's not the same thing as here. Here tether started pointing down and then we price followed. But here tether stays up. So if tether stays up, to me that's positive. And I think that price will rise. Okay, let's see. So we are negative on this one. I mean, it's fear. Here, interest is picking up slightly for now, and that's my disclaimer. So we took a look at everything. I think that I was quite clear about the important stuff, which is Elliott wave. The rest is just for fun. Thanks for watching this video. I'll keep you updated as soon as I have more information about the price and our outlook. As soon as I can tell you, for example, that an impulsive wave has started, which for now I cannot, since I still believe that we are in a corrective phase. Thanks a lot and see you soon. Bye.